Good morning, everybody. This is Live Trading Talk with Patrick MontesDeOca for February the 1st, 2022. Time is flying. What I would like to do is pick up from last night, the market wrap of last night, and pick it up from there and review, basically moving forward for today's action. What I want to share with you here is the robo-advisory service that we have initiated under the vcpmi.com website, where we pretty much automate the VCPMI as a robo-advisor. Let's take a look and see what it looks like here for this week.
Hello everyone, this is Equity Management Academy with a weekly gold report for January 28, 2022. Summary: the weekly trend momentum of 1805 is bearish. The weekly VCPMI of 1810 is bearish price momentum. The close above 1810 stop negates his bearishness neutral. If short, take profit 1763 to 1734. The next cycle due date is 2/18. Trading instructions. Weekly trend momentum, 1805, bearish. The gold futures contract closed at 1795. The market closing below the 9-day SMA 1805 is confirmation that the weekly trend momentum is bearish. A close above the 9 SMA would negate the weekly bearish short-term trend to neutral. Cycle. The next cycle date is due February 18, 2022. Strategy. The weekly trend momentum is bearish unless it closes above 1805. Weekly price momentum, 1810, bearish. With the market closing below the VC weekly price momentum indicator, 1810, is confirmation that the price momentum is bearish. A close above the VC weekly, it would trigger weekly stops and negate the bearish trend to neutral. Cycle. The next cycle date is due February 18, 2022. Strategy. The weekly price momentum is bearish. Use a close above 1810 as protective stop. Weekly price indicator. Exit, longs. Sell 1, 1839. Sell 2, 1886. Exit, shorts. Buy 1, 1763. Buy 2, 1734. Look to take profits on shorts into corrections at the buy 1 and 2 levels of 1763 to 1734 and go long on a weekly reversal stop. If long, use the 1734 level as a stop close only in good till cancelled order. Look to take profits on longs as we reach the sell 1 and 2 levels of 1839 to 1886 during the week. Cycle. The next cycle date is due February 18, 2022. Strategy. If long, take profits 1838 to 1886. If short, take profits 1763 to 1734.
Hi everyone, this is Equity Management Academy with the weekly silver report for January 28, 2022. Summary. The weekly trend momentum of 22.83 is bearish. The weekly VCPMI of 23 is bearish price momentum. A close above 23 stop negates this bearishness neutral. The next cycle due date is 2/18. If short, take profits 21.64 to 20.79.
Trading instructions.
Weekly trend momentum 22.83 bearish. The silver futures contract closed at 22.30. The market closing below the 9 SMA 22.83 is confirmation that the weekly trend momentum is bearish. A close above the 9 SMA would negate the weekly bearish short-term trend to neutral. Cycle. Next 144 cycle date due to 1822. Strategy. The weekly trend momentum is bearish unless it closes above 22.83. Weekly price momentum 23 bearish. With the market closing below the VC weekly price momentum indicator of 23, it confirms that the price momentum is bearish. A close above the VC weekly, it would trigger weekly stops and negate the bearish signal to neutral. Cycle. Next 144 cycle date due to 1822. Strategy. The weekly price momentum is bearish unless it closes above 23. Weekly price indicator. Exit. Longs, sell 1, 23.85. Sell 2, 25.21. Exit. Shorts, buy 1, 21.64. Buy 2, 20.79. Look to take profits on shorts into corrections at the buy 1 and 2 levels of 21.64 to 20.79, and go long on a weekly reversal stop. If long, use the 20.79 level as a stop close only and good till cancelled order. Look to take profits on longs as we reach the 23.85 to 25.21 levels during the week. Cycle. Next 144 cycle date due to 1822. Strategy. If short, take profits 21.64 to 20.79. If long, take profits 23.85 to 25.21. Hi everyone, this is Equity Management Academy, with the weekly Bitcoin report, for January 28, 2022. Summary. The weekly trend momentum of 45,065 is bearish. The weekly VC PMI of 36,517 is bullish price momentum. A close below 36,517 stop negates this bullishness neutral. If short, take profits 34,123 to 30,477. If long, take profits 40,163 to 42,557. The next cycle due date is 2/18. Trading instructions. Weekly trend momentum 45,065 bearish. The contract closed at 37,809. The market closing below the 9 WSMA 45,065 is confirmation the weekly trend is bearish. A close above the 9 WSMA would negate the weekly bearish short-term trend to neutral. Cycle. The next 144-day cycle is due on 2/18/22. Strategy. The weekly trend momentum is bearish, unless it closes above 45,065. Weekly price momentum, 36,517, bullish. With the market closing above the VC weekly price momentum indicator of 36,517, it confirms that the price momentum is bullish. A close below the VC weekly, it would negate the bullish signal to neutral. Cycle. The next 144-day cycle is due on 2/18/22. Strategy. The weekly price momentum is bearish unless it closes above 36,517. Weekly price indicator. Exit. Longs, sell 1, 40,163. Sell 2, 42,557. Exit. Shorts, buy 1, 34,123. Buy 2, 30,477. Cover short on corrections at the 34,123 to 30,477 levels, and go long on a weekly reversal stop. If long, use the 30,477 level as a stop close only, and good till cancelled order. Look to take some profits on longs, as we reach the 40,163 to 42,557 levels during the week. Cycle. The next 144-day cycle is expected on 2/18/22. Strategy. If short, take profits 34,123 to 30,477. If long, take profits 40,163 to 42,557.
I wanted to share this reports and take a look at the action of the market here as we're starting this week. And if we take a look at the gold market here, the high was 1809.10, and this is coming in right into the weekly average price of 1810, which is the average price that we identify for the rest of the week here. And this has been a target from this long position that was activated by the market coming down into this level of about 1780 that I published, that was an extreme level below the mean, and that we have about a 90% probability that we're going to see a reversion unfold from here as we came down into this level here last week. And the market reverting back from a low that was made of 1780.60 on the 28th of January. So we have reverted back into above the daily average of 1795 and has gone up to pretty much complete the weekly target of 1810. Now, one of the things I want to point out here is that the daily targets were also completed today, and harmonically it was aligned with the weekly at 1810. So I recommended my traders in my private trading room here to begin hedging up here to take profits. We took some profits on the silver, and I recommended to hedge in the gold market here at these levels. What you see here is the daily price entered into the red zone. If we just look at the daily signals. The weekly signal is bearish unless it closes above 1810. So what we're getting here is a harmonically level of resistance at 1810 daily and weekly. And the expectation of the algorithm, as I keep reiterating this over and over again to my traders, my subscribers here in my private trading room, that this is an area where the mathematical probabilities are very high that you can expect supply to come into the market as the momentum activated a bullish price momentum at 1795. By trading above or closing above 1795, it automatically puts into target the 1810 number. What we saw here is that the market actually found buyers at a higher level. At a higher level than coming down into that 1763, which is still the weekly buy one level that is recommending, if the price comes down here, that this is an area where you want to buy. As we see here, we've come down, and every time we've come down to these levels here, we've seen a reversion unfolding. And that's pretty much what we are supposed to see when we apply mean reversion trading. We trade against the mean, which is the green zone, and the average price. So you see the market in gold getting up to the weekly average price, and as Nikki the robot, our robo-advisor, suggested, is that unless the price closes above 1810, that this is a bearish price momentum. So now we've activated a daily trigger from the sell 2 level, a daily trigger from the sell 1 level, and a bearish price momentum weekly. And the initial target initially is 1795. Unless we close above 1804 and 1810, it will negate this bearishness. But in the meantime, it looks like we found some resistance into that 1810 weekly average and sell 2 indicator or target for today. Taking a look at the silver market here, the same thing. The market reverted from the level of about 22.26. 22.15 was the low made on the 28. And reverted right back up into what you see here is the extreme weekly target anticipated of 23. We recommended our traders in our private trading room to take profits on the swing position here and go neutral. When the objective is completed into the mean or the average price, the signal goes neutral. For day trading, swing trading, and futures. And the same thing as the gold market, it activated a bearish price momentum after accomplishing the target of 2306 and reverted, activating a bearish daily signal, validating this bearishness, and now it's entering into the sell 1 level daily as it completes the target from that 2286 above. A close below 2267 will activate 2246. So we are in a bearish mode, and I think we just completed the target now as it made the low on this bar of 2267. So this is the way that I apply the methodology in using the VCPMI as GPS for my trading. So now I'm looking at the Bollinger Bands, I'm looking at some of the other indicators and see how they relate to these levels here. But so far it looks like the short target from the price momentum weekly, the sell 2 level daily has completed the target, which is the level below, in this case the sell 1 level. If we close below 67, we open the door to 2246. Let's take a look at Bitcoin here. The low on the 26 was 35,485, excuse me. Let me open up this chart to a daily chart so we can see a little more. The standard deviation or the regression level, or levels you might say, in addition to the Fibonacci retracements that we are measuring from the low that we made in July to the high of 69,355 that was made on November the 10th. And we've seen a drop from 69,355 all the way down to a low of 32,855. That's more than a 50% retracement, actually more than a 78.6% retracement. Now, what I want to point out to you with regards to Bitcoin here is that we've come down to the extreme below of standard deviation between the high that we've made of 69,355 and the low that was made here back in June of last year, June 21. We've retraced about 78, a little greater than 78%. But what you see here is that we've reverted right where we supposed to. In fact, we activated a weekly buy trigger by reverting here about 34,123 on January the 24th, and we are in this pattern, this bullish pattern that has reverted from the extreme level below the mean and the standard deviation. Extreme level. So if we just go back to 50-50 standard deviation, we're looking at about 54,000. And the extreme above it still points to a high of about 70,664, which puts into place basically Bitcoin testing the highs that we made last year of 69,000. let's continue to watch the market here. And see where it wants to go here with regards to the data, you might say, of the VCPMI, which essentially is a mathematical matrix that we use that identifies the extreme levels of speculation above or below the mean. And we use standard deviation, we use pivot points, moving averages, Fibonacci sequences, W. Gantt formulas, all into one filter that is called the variable changing price momentum indicator. The gold market has come down to the bottom of the channel as well, of a major long-term channel that is building. And the upper end of this channel is about 1919. I think we need to break this resistance level which is in that 1840 area. And I think if we get above 1810, we have a good chance to breaking out of this what appears to be a bit of a wedge building up here, a bit of a descending wedge, and breaking above here 1840, 1850 obviously is going to challenge the 1920 levels, and breaking that we're looking at about 2000, approximately 2000, which corresponds with the yearly numbers that we're looking at. And the 1805 is the monthly average. So if we get above 1805, we're going to be accelerating towards 1840. But you can see the reason why, we pretty much found some resistance here, and that's because it met the monthly mean or the average of 1805. So now we're going to see supply and demand trade at the standard deviation of the mean, which is 50-50 standard deviation. And you can see it even in the open interest that all the sellers have capitulated. And now what we want to see is volume in the open interest move up as the price begins to move up above 1805, and ideally above the yearly average of 1840, which validates and confirms the 2003 target that I just mentioned to you. So gold is getting ready, my friends, from a technical perspective to begin its move, but we want to see confirmation, and we will continue to examine the market microscopically for the benefit of you guys, self-directed traders that are looking for a way to think out of the box, so to speak, away from conventional technical analysis into what it's called mean reversion trading. It's a pleasure, my friends, to share this with you once again. Have a great trading day for the rest of the day. You're welcome to join us in my private trading room. Like and subscribe and request for a trial. Take care. I'll talk to you next time.